So since it's Life Insurance Awareness Month, we figured that it only made sense to take some of the questions that were asked in our survey about life insurance and use this video to answer them. So let's get started. My name is Jason. I am the founder of the Kennedy Financial Group, as well as the founder for the Alliance for Medical Professionals and Educators. I have again with me Nicole, who is the head of client acquisitions. How are you, Nicole?
Hi, Jason. I'm doing okay today.
All right, awesome.
So I know voice is better. My voice is better, you can see.
That's a good thing. So I know we got a ton of questions, and we made the promise that we were going to work through all the questions that were given to us by our clients, our network. But there were some questions that were asked primarily associated with life insurance. So I was thinking we could take those questions for today.
Okay. So once again, I got 4 questions that we pulled together from our list. And so we'll go ahead and get started, just like last time. So the first question from one of our readers, Jason, they said, I bought a policy and honestly, I have not kept track of it at all. What are some things I should keep track of with my policy?
So believe it or not, that's probably one of the biggest things that happens when it comes to life insurance. A person, maybe in a moment of clarity, they purchase a policy because they know they need it. They never see it, think about it, or hear from either the company or the person who helped them acquire that policy again. But there are some important things that you do want to keep track of. For example, you want to know how much is the policy worth? If something happened to you tomorrow, what would the death benefit of that policy be? You also want to know how long the policy will last. There's so many different types of life insurance. You want to know in your mind, this policy is guaranteed to last for this amount of time, because then you can make sure that the rest of the planning you're doing financially matches up with that time frame. A couple of other things that you may want to give thought to is as circumstances change, whatever your original need was when you had your policy may not be the same. For example, maybe when I was just a single person, I may not have needed much of life insurance. Maybe I just needed enough to make sure, no one would have to pay for my funeral. But now that I've been married for 10 years, my needs are different, right? I may need more life insurance. So the point, as circumstances change, you want to make sure that you're updating your policy as that happens.
Okay.
Oh, one more thing that's always forgotten: beneficiaries. You want to change the beneficiaries. You want to check to make sure the individuals you have as beneficiaries are who you want. If a divorce happens, a death happens, and the beneficiary is not changed, that could create some problems down the road as well. So you want to check for that.
Thank you. I'm glad you did not forget that part. That's very important. Definitely want to change that bit for beneficiaries, especially in case of a divorce. So our next question is, what happens after I retire and my employer's life insurance expires?
That's a good question. Most employers offer life insurance to their employees as an employee benefit, just like they do with the health insurance, vacation time, and other employee benefits. And so when a person leaves the workforce, whether it's because of retirement, illness, or losing their job in some other way, typically that insurance policy is going to go away. Now, some companies may offer you an opportunity to keep it, but the price is probably going to go up and it probably could become pretty expensive. And that's why I'm a huge advocate. I think it's good to have a policy with your employer. But if that's the only policy a person has, that's a problem, because now they have no control. The company controls their benefit. So if you have a policy outside of work, now you have some type of control, right? You're not contingent upon the employer to cover your emergencies or expenses that may come up if you pass away prematurely.
Okay. Thank you. Thank you for that, Jason. That makes a lot of sense. And so Our third question is, how much life insurance should I purchase?
Yeah, good question. Really good question. You should purchase as much insurance as you can afford to purchase. Most people are overwhelmingly underinsured.
Okay.
Uh, you think about the primary job of life insurance is to replace the economical value that a person brings into their household. So just take a person, maybe they're 30 years old, they make $50,000 a year. And let's say they plan to work that job for 30 years. They're going to make $50,000 a year for the next 30 years. They're going to use that money to pay bills, save for retirement, and etc. If they pass away prematurely, all of that economical value is gone. So the real purpose of insurance is to replace as much of that economical value as possible, right? So just having a small amount of insurance, it may not be enough. A person might need to investigate having more.
Good to know. Okay, thank you. So our last question of the day, is, which makes the most sense to buy? Is it term, whole life, universal, variable, just the average policy my employer gives me? How do I know which one I should get?
Yeah, there are a lot of options, and those options create confusion for a lot of people. What adds to the confusion is that the life insurance industry themselves fight amongst each other about which one of these policies are better. So you got some people who swear that term is the only way you should go, or whole life is the only way you should go, or index universal life is the only way you should go. And as a consumer, it just makes it confusing. The simple answer to that question of which one should you choose, which one is better, none of them are better than the other. They're all just tools. To say one is better than the other is like saying a hammer is better than a screwdriver, right? They're all tools, right? Now, depending on the job you're trying to accomplish, a hammer might be better, right? If I'm trying to put a nail in a piece of wood, I don't need a screwdriver. I need a hammer, right? If I'm dealing with a more delicate job, maybe I need a screwdriver. So the key is to know the differences between those different types of policies, and then you can find out which one does the job for you the best.
Okay, so this is my question, Jason. Why would I want to save in my life insurance versus my 401k? Why would that make a difference?
That's a really good question. I think it has to do with the way that it grows. I'll give you a couple of reasons, in fact. 401ks, that money's typically invested where?
In the stock market, right?
Yeah, it's invested in the stock market, right? And while we might desire to have some of our money invested in the stock market, do we put all of our money there?
Not at all. I'm
Not
not
at
taking
all.
that risk.
Exactly. That's too much risk, right? So we take the money that we don't want to risk and we put it in a bank account or savings account. And what do you know about savings account rates right now?
Kind of low, not that great.
Exactly. So the first reason a person will put money into their life insurance to grow it is because you get a better growth rate. It's better than CDs, savings accounts, and bonds. That growth feels even better because it's tax deferred. That means you don't pay taxes on that money as it's growing, and you can access that money tax-free and retire.
Okay, so that makes sense.
Yeah. And in addition to those two reasons, a person may want to have some money that they can access throughout their working years. So life insurance is different from your 401k in the sense that if an emergency happens, you can actually access that money inside of your policy while it's growing if an emergency comes up. And then the final reason why a person might look to life insurance is that they're just higher contribution limits. So my 401k, my Roth IRAs, and other retirement accounts, they restrict how much money I can put into those accounts each year. Life insurance doesn't have a contribution limit. So once I max out those accounts, if I still need to save, I can dump money into my life insurance policy and get a competitive growth rate on those funds. So it doesn't mean that you'll have one or the other. But there may be some benefits to having a combination of assets working together to help you create more retirement income.
Got it. I like the way you said a combination of assets. It reminds me of what my mom always used to say, never put all your eggs in one basket.
Yeah, that's it. That's the goal right there. And as
Okay.
things continue to advance, there are just more baskets available for us to put our money into.
Thank you. I really appreciate that. So I've enjoyed this video with you and hopefully look forward to next time.
Okay, look forward to it. And if you appreciated this video, we encourage you to subscribe. If you have questions about life insurance, I know it's so confusing. Put those questions in the comment section and we'll try to answer those questions too in a future video. And if you appreciated this content, subscribe, let us know. We'd love to have you part of our community. Until the next time we meet, we hope that you and your family take care.